All right, we got a action-packed episode of Textbook Tuesday today. It's an open door session for my newbies and anybody that's wanting to familiarize themselves with the current market conditions. This is the perfect place to be. I like to post these in my groups, my social groups, and even on social media. And if this one's a good enough topic for today, we'll get this put on YouTube so everybody can come back and get the information all over again. So. Without further ado, we'll hop into it. So the two topics today were building a watch list, which I have to do for the US dollar pair. So when I get there, we'll build out a watch list specifically for um, the broker that you're using and to create a basket of, in my case, currencies. If you guys are using stocks, you take the S&P 500, maybe a basket of some of the top grossing equity markets that are that comprise that S&P asset class, that asset basket, and then look at all of those to determine which one has the most strength relative to the basket itself. Should you be trading the whole basket? Should you be trading the individual stocks? That's something that you would be able to see. Would you be able to time those moves? We do that a lot with crypto. Crypto allows us to do that. If Bitcoin moves a certain amount, we would expect that move to propagate to the smaller crypto baskets, the Ethereum, the Litecoins, the Bitcoin Cashes, the XRPs, those sort of things. So we can do that with crypto, same way we can do that with stocks, and same way we can do that with currency. So knowing that and knowing the the trajectory of the markets that we're currently in, the risk picture, the fear picture, inflation, the inflationary pressures that are on the entire world right now because of our oil prices are moving and the Strait of Hormuz and all the geopolitical tensions. Knowing how these things propagate into the market and propagate out into their subsequent baskets is big. And that's what I do with the currency board. I take a fundamental and a technical analysis and I marry the two, quantify them based on their strength, and then spit out a numerical value equivalent to that country's relative strength. And like I said, the relative strength calculation will do a lot of the grunt work for you, and it usually is the deciding factor on a lot of my trades. Is usually what gets me into a lot of these markets. It shows me a nice flowing chart, and I think that's one thing that really separates new traders from more seasoned traders is their filtering process. How do they filter through these trades? How do they tell what's a good trade and what's a bad trade? And that's what that does for me. So, like I said, without further ado, we're going to hop right into it. So, what we have here is a chart of the S&P 500 mixed with the 10-year bond. What does this show me? Like I talk about all the time in excruciating detail. If this is the first time you've heard me say this, it won't be the last. The S&P is risk finance. The 10-year bond is debt finance to the US government. The US government will basically take on debt in order to pay out at a later date these bond yields, right? So it's an IOU. So we'll pay you 5%, 4.9%, 4.936, whatever it is. We'll pay you this in exchange for your money, but we'll give it back to you in 10 years. We'll give it back to you in 30 years. We'll take this money, we'll build roads, schools, we'll build bombs, and all the rest of the stuff they use. The government is funded through these 10-year, 30-year bonds, right? So whatever they want to do with that, that's what they're going to do. And they're going to give you back that 4% guarantee, 5% guarantee. The S&P, however, is a much riskier asset class. And with that increased amount of risk comes increased amount of gain potential. So we've got these two married together on a chart, the risk versus the safer risk. And we want to see how the rest of the world is positioning themselves. Are they positioning themselves for more risk, or are they fleeing to safety? Is it a flight to risk or a flight to safety? And that's what I can see here on this chart. So that's what I'm looking at. And what I can see on this chart is that it's pretty much neutral on the higher time frames. It's kind of mixed up in between all of the EMAs here and on each of the time frames. However, here on the weekly, we did have a break of structure of this uh, weekly channel. They broke out to the downside, which would be considered a sign of weakness, except for the fact they made it back to the middle of the trading range. If you pulled a fib on that, you'd see that it's at the 76.4%. This is a major rejection area. If this doesn't reject, then it's probably going to continue to go up from this point, right? There's a huge pivot point, but we just haven't broken out of either side of it. So we're waiting for that. Are we going to tilt all the way to we're back and we're putting money back into the equity markets, or are we fleeing back to safety and saying, okay, there may be another war starting up and we do need to chill out. So that's what I'm looking at here. And that's what I'm able to see with that. Here we got the US 30 against the leading commodity right now, which is gold. And right now it looks like the equity markets are outpacing the gold markets here. However, on the weekly, it looks like gold market is outpacing equities. But over the past few days, the past few weeks since March, equity markets have started to make a run to the upside. However, they're not, and they haven't broken above the resistance that is keeping them bearish at the moment. So slight risk on sentiment. Equity markets are getting the oomph, that push of bullish sentiment. Here's something I wanted you guys to notice that I didn't get a chance to talk to you guys about. Noted this on Sunday. We had the market mastery call, and I did not record that one, but this is one that you guys can see here. As far as Bitcoin goes, Bitcoin in relation to gold, it has started to show some signs of strength over the past few days, right? We've broken above the resistance. This would be considered a pullback for the most part, but it is showing a little bit more bullish structure and bullish sentiment. However, not enough to overcome everything that I went through in relation to gold having its major run. So just keep that in mind. Bitcoin is starting to gain a little bit of strength. Weekly time frame a little bit more bearish, but underneath the microscope, you can see something brewing a little bit. Is it enough to get me hop back into crypto? Not yet, but something to take note of, something to look at. S&P 500, like we talked about, equity markets, equity markets, equity markets, right? Here, if you look at the 4 hour time frame, these were the all-time highs from last year, right? This was December 25, January. Everybody's seeing all-time highs, but they're only seeing plus 1% in their brand new accounts for the year, right? It's a big reset right here. So plus 1%, and everybody sees negative 4% for the rest of the uh, first quarter of the year. Then big change in character. We can see, like we talked about before, that CO behavior, where the change of behavior occurs here. Where we can see an area that was previously bearish is now extremely bullish. So we can see that has shifted. And if we come look at COT, I'll bring this up from what I do every week. If you look at the S&P 500 COT analysis for the month over month, you'll notice something, and I'll put this back up on this chart because we're looking at the 4 hour. You'll notice that month over month, dang, if I can get this a little bit smaller for you guys to get it in here. Hope you guys can see that month over month as we look at this, and I'll get the brush out from April 21st, from in between March 24th to April, we increased the longs by about 100,000, or maybe just 50,000 units. We also increased shorts by about 30,000 units. There's 50,000 units. Yeah. Yeah, just wash them. Okay. Yeah. Oh, you need me to open it? Or just open it like this? It's not a zipper. Yeah, you're welcome. All right. Um, So this one went up 50,000 units. This one went up 30,000 units, right? So we can see we added more longs than shorts, right? That looks kind of crazy, but whatever. We added more longs than shorts. And also we have more longs than shorts. So it's 1,425 to 1,448. So as prices were coming down over the past month, they have been positioning themselves, the large operator has been positioning themselves long. So we've actually over month, the change in that positioning has gone from negative, where we had more shorts than longs, to more positive than it's been all year. So that's a big 704.3% change month over month when you look at it like that. And they try to hide these things because they do COT week over week. So unless you're looking at this from uh, a macroscopic view, like take a step back and zoom out of the lens, then you'll be able to see that. And that's why I have the Taco Tuesday indicators here. That's every Tuesday where that COT gets released to the large operator. We don't get it until Friday. They get it on Tuesday. So you'll see the behavior in that bar is pretty much what I'm talking about there. So if I can get all of this stuff erased. Oh yeah, it will let me finally. I was like, what the world? They used to not let me reverse. Okay, so that's just something I wanted you guys to see about the S&P 500. Right now, we're seeing that it's above. It's probably about 3% um above those all-time highs right now. Yeah, I see about 3.6, 3.9%. And that's what people are seeing in their accounts, right? If you trade the S&P and trade the S&P all year, you're up 3.9%. If you bought it in January, you're up 3.9%. Took a long time. Took a few months, but you're up. Okay, so we can see now we're above the 50 EMA, we're above 50 EMA on every time frame, really. So that shows that we're bullish, risk on sentiment. And that's something that I take note of in my currency board. Right? Just shows the markets are pushing for the risk on sentiment. Here's the VIX volatility index, or the fear index. This is it shows the opposite of the S&P 500. So this is the S&P 500 going up, shows that we're risky. The VIX going down shows that fear is leaving the market. When the VIX goes up, fear is entering the market. S&P goes down, those sort of things. So we're no longer seeing that. We talked about looking for tops here in relation to bottoms on the S&P. And if you come back and look, this top here, Monday, March 30th, we go back to the S&P, still in the same spot on it. Monday, March 30th coincides with the bottom here on the S&P. Little things like that, keywords, tricky phrases, little things that you can use, these tools. If people want to find bottoms in markets, if that's their thing. That's a little great. Here we got gold. Looking at gold by itself, seems pretty neutral, bearish on the lower time frames, and starting to roll over and lose some strength here, which definitely a change of behavior on the weekly. As we see, we came out of that upward trend with a big volatile move to the downside. They're still working that out as we speak. So it looks a little bearish there for the gold market. Seems to be cooling off a little bit because there's another commodity that's doing a lot more damage, right? And it's the opposite of gold, black gold or oil. We'll take a look at that as we all have been going to the gas pump a little bit more than usual. I'm sure you guys and the entire world is feeling that constraint right now. So here we got the Vanguard Total World Stock Index. Looks similar to the S&P 500 because this is the stock ETF for the rest of the world. And the rest of the world's equity markets are also currently bullish and have also pulled back and started to show a little bit more strength. Actually, a lot more strength than um, the US markets. have been, right? Same bottom in March, but these highs didn't it didn't as you can see the way it moved upwards, it didn't have as long as a downward period as the S&P did. So there are some equity markets like the Nikkei 225 that are up 16% in relation to the dollar's 3%. So that's just something I want you guys to look at. Total world stock index going up faster rate than the S&P 500, but equity markets globally are going up, which is a macroeconomic risk on sentiment. So it's not just us, it's everybody. Okay. Here, the NAS 100, US 100, it's definitely moving a lot faster. These are the top 100, not the top 500. We're taking that sample size and we're constricting it down to the top 100 grossing US equity markets, and those ones are doing a lot better. And you guys can see certain things here, like this change of character where we were bearish and then we make that extreme move to the upside. So yeah, little things like that. Equity markets again, extremely bullish. Crude oil futures, this looks a little bit more bullish than oil does, and you can see where some of the money's going. Definitely in the crude oil. It's now up to $104.77 per barrel. It was at 102 last night. So 12 hours ago, it was at 102. It's at 104 now. About a week ago, it was down to 96. And now it's all the way back up again. So as that's telling us, that is letting us know that there's still a constraint on agriculture and still a constraint on energy um, due to the geopolitical climate. So tensions are still there, and just sit tight through that. Economics talks about a couple terms, and one is like the elasticity of demand, which is there are certain goods that you'll buy regardless to the price. Gas, if you have to go to work, you're gonna go get gas. If you're a farmer and you have to use that diesel tractor, you have to go get gas. So there's certain things we're gonna get regardless, but there are also certain things that if the price goes up, you say, I don't need that. I'm gonna go get the cheaper alternative. And that's just economics and the invisible hand, which is price, moving people in a more economic direction. I'm gonna stop driving the diesel. I'm gonna go drive the car. I'm gonna not drive the car. I'm gonna go ride my bike or take the bus or ride the scooter. And that's essentially those things filtering into the market. So people are gonna move to a level of comfort based on pricing, and that's what we're seeing. And that's what I'm looking at on a daily basis, right? 6:30 to 7:30. I'm checking how everybody's moving and squirming and what the cost of things in people's refrigerators are from yesterday to today to over the past month. So that's really what we're looking at. We can see the money flowing into crude oil. We see the money flowing into equity markets. Let's see what else we got. 2-year bond. I don't really look at the 2 year. It's not enough risk. 10 years is a lot more risk. If you put your money somewhere for 10 years, you might need it back. That's why they're going to give you a 4.350, which has gone down some. It was 3.46. There's 350. Oh, actually, it's gone up. Yeah, it's actually gone up since yesterday. Then the 10-year bond, it looks pretty flat right there, but the 10-year bond is at 4.939. And this has gone down a little bit. It was 4.952 yesterday, 4.939 today. So as the Fed buys and sells bonds, it increases and decreases the money supply respectively. They buy bonds, the money supply increases. They sell bonds, the money supply decreases. That's something that they can do without having to directly go grab money out of the pockets of individuals like myself or yourself through whatever means they want, more taxes, more whatever, right? Toll fees increase and all the rest of these things. So there's ways that they can do that subtly, and those are called open market operations. Every company, not every company, every country does it. You'll see they'll either be buying bonds, quantitative tightening, quantitative easing, those sort of things is what it's called. Right now, we can see that they're buying bonds. Bonds are nearly neutral, but they're definitely bullish on the higher time frames. So we can see that is their mechanism for maintaining the money supply in the face of inflation. Um, and what I didn't look at real quick, I didn't take note of the VIX's actual value. Let's take a look at the VIX. VIX is at 1784 right now, which is down from yesterday, which was 18.2, 17.84, which shows that there's a little bit more fear leaving the markets, which is meaning more risk is entering the markets. So with that being said, that's the
Oh,
picture
wait,
there.
quick question.
What's what's up?
VIX is the volatility index, right?
Yep.
Okay, just making sure.
Yep. Volatility index for the S&P 500, which is the antagonist to risk. It's fear. It's a fear index. So that's what we're looking at there real quick. We'll come take a quick look at crypto. Not anything crazy. Like we talked about Bitcoin's making a little bit of a run. It's not like a run to be like a run to remember or anything like that. It's just slowly doing its thing. It's not dumping, but it's also not running either. So nothing really interesting here. We'll move over to the relative strength side of the chart and the calculations. Yesterday, the yen held rates at less than 75%. So a hold doesn't mean that nothing's going to happen. It just means that they're not going to adjust their interest rates because interest rates is the other way that they manage the money supply. You increase the interest rates, right? That shrinks the money supply and the value of the money, right? And then you lower the interest rates and that increases the value of money and then shifts our money supply to the right and increases it. So the things that they do there with the interest rates also coincides. If they're not going to move the interest rates, then they'll buy or sell bonds. So it's little things like that. So here we're looking at the US dollar currency basket across the board against all the rest of them. It's pretty neutral, still neutral. It was neutral last week, it's neutral this week. And for good reason, they have a monetary policy statement tomorrow. So not going to be a lot of volatility leading up to it. It's kind of like a stalemate up until the decision, whatever it is. Um, but regardless, like I said, contingency is what we're going to fail safe with, right? If we think it's going to go up, that's fine. We'll take three or four positions to the upside, and then we'll have maybe two or three positions with contingency to the opposite direction against pairs that it's a little bit weaker against. So I would put this as dollar being a risk off pair and a risk on environment. I'll say my risk on sentiment would be Aussie, USD, Kiwi dollar, and maybe dollar CAD short, Aussie and Kiwi long, and then everything else really dollar yen long, euro dollar short, pound dollar short, dollar Swiss long. Uh, Things like that is probably how it end up running tomorrow, and that's almost exactly what I'm going to do. But we'll look at the as we create this relative strength board, currency board. We'll do that. So like the way I look at this, if it's straight down the middle, then that's a 3 out of 5. It's neutral. It's in the middle. It's not bearish. It's not bullish. It's not extremely bearish. It's not extremely bullish. So I'll give these scores from the weekly, daily, and 4 hour of 3, and then I add all those up with the commitment of traders data, and that's how I get that score. And then along with the relative fundamental strength of the interest rates, the interest rate outlook being bullish or bearish, the inflation outlook, which for everything right now, inflation's going up. So everything's got a pretty high, either 3 or 4. But there are some stable countries whose inflation isn't moving very far right now. So that shows strength. Economic activity being the GDP statement, which is a measure of the consumption, the measure of the investments, the measure of the net exports, meaning what leaves a country versus what comes into a country, and how well are they doing? Are they net exporters? Are they net importers? And looking at all of those things is the GDP, and that one number. is the economic health of a country. If that's going up, then they're doing good. If it's going down, then they're not doing so good. And I look at those things as well, and then the equity markets, which we already just touched on. Um, all of those go into the fundamental analysis side. That's added to the technical side, and then those two are married and produce a final score, and that's what we go and gauge our trades off of at the end. So, like I said, dollar's pretty neutral, threes across the board. However, relative strength wise, uh, from the COT, the dollar is net short and has been net short. So we can take that into account as well. Here we had that movement last night. I do think, and I did think the yen was going to continue to go bearish. At this moment, the yen hasn't really done anything. But one thing to be certain about over the 4 hour, that strength that showed up was sold into. So that's pretty much the sentiment that I had imagined. Whatever strength was going to show up was going to get shorted into. And the trades that I took for the time being of that knee-jerk reaction worked out. The trades that I had set up for the after effect, those are still propagating right now. So we'll see how those work out. But we also have the US dollar, which is a much bigger wave that's going to hit the market. So I took quarter positions, half positions, nothing really crazy. Oh, wow. You ate the whole apple. Good job. Yeah, you're munching on it. All right. And then what was that? Right. So so we expect prices to just allow things to propagate, but the dollar is going to be a much larger splash into the pool. So a position size necessarily, right? So yeah. So the yen still a two, and a two, maybe even a three, because it gained some strength on the 4 hour. So I'm gonna give it a three because there was some strength gain. It did make everything else short against it initially. And we'll see if this strength can kind of propagate throughout the rest of the week. Um, but it looks like they shorted under that strength, so we'll see. Euro seems to have bounced on the lower time frames, broke down below that structure on the 4 hour, and it's pretty neutral, but bearish looking on the 4 hour, which is that's what I had yesterday. Nothing really changed. Neutral with a slight bearish sentiment. Looks good on the lower time frames to continue a little bit higher bullish, but up to that market, not really sure what that's showing. These are more neutral markets when we talk risk on, risk off, but I could see the pound and the euro doing well. Here we see the pound has gained slight strength. It's still a three, and another three on the higher time frames, but it looks, promising on the lower time frame. So we'll see. But threes across the board, yeah, pretty much the same as yesterday's currency board. Here, the Swiss have gained some strength on the lower time frames. Higher time frames, though, it's a three, still a two, and still a two there for the Swiss. But lower time frames show that they may have found this this base down here and might be a drop base rally starting to show up. We may have changed a little bit of sentiment, created this phase A, phase B, where they test the maximums and minimums, and then this feathering to break out to the upside. So no spring, potential phase E right here, phase E trend out of range, back to the creek to continue up. I don't want that all of those terms to freak you guys out because you guys are new, but we did talk about the CO actions yesterday. I mean, not yesterday, last Tuesday, we did talk about the phases. Hopefully, you guys have uh, done some research on those. I also gave you guys some locations of some of the teachers that can discuss volume spread analysis on the internet for you. So that's just what we're talking about here. Swiss still twos, threes on the week, twos everywhere else, and that is consistent. Here we have the CAD also having a monetary policy statement tomorrow. The neutrality here with some slight bullish sentiment is what I'm seeing here for the CAD, but It's not necessarily really bullish anywhere other than like looking aggressive or anything except for on the 1 hour. Everything else seems pretty neutral, where it could give away some of its strength or where it could gain some. Now, the Canadian dollar and oil have a very close correlation because they export a lot of oil to the US and other countries. So, in the midst of the geopolitical situation, the Canadian dollar moving oil is beneficial to their country. So, that's something to look at. Right now, it's really neutral, too neutral in a way. I'm going up instead of down. Here we got the Aussie, which had strength. I was relying on this a little bit yesterday. It was the strongest pair for the year. Gave back some of that strength literally when we got on the call, right before we got on the call, but it's starting to get some of that back. But it looks like it is losing some of that strength. It does have some room to push back. I mean, it had a great run for a number of weeks. So it is what it is there. We'll see. Right now, it's a four, and another four. Really, it's still just as strong as it was yesterday. But I can see from being in the charts that it is losing a little bit of that strength, which is why contingency worked out really well. Same thing here for the Kiwi. Kiwi wasn't necessarily the strongest one, but it did have a good week prior. But it gave back some of that strength, and this was a trade that I was able to position myself for with contingency against that yen, which was expected to go a little bit weaker, but maybe gain some strength. This one was potentially going to gain some strength, but could have got weaker, and it played out well. Okay, so here we're pretty much threes across the board, but it does have a little bit of room to drop a little bit lower. So nothing really changed as far as the relative strength picture. If you guys are in the subscriber group, this relative strength calculation is coming to the group in the next few minutes. Uh-oh, let me get that minimized so I can actually get a good screenshot on this. So that's that. And I'll give you guys a little snippet of the number side of the board here. But I don't know if you guys are probably paused right now as I drop this into the group. 28, 26. FOMC statement tomorrow. All right, perfect. And then I'll get this set up here, right? So, like I talked about, though, take relative strength with a grain of salt because what matters is the chart in front of you. So we'll come back to this S&P chart. I put this here for you guys really quick so you guys can have this, can screenshot it and do what you want with that. There's a few pairs that are a little bit weaker than the dollar. Swiss is weaker. The euro is a little bit weaker. The yen is weaker than the dollar. So tomorrow we got one, two, three pairs that we can go long against. And then we got one, two, three pairs that we can go short dollar against. So 3 and 3. It looks like a good plan for contingency. We can go both directions, both bullish and bearish on those trades. And as long as we set our stops in a good spot, right, we should be out of harm's way to allow that market to kind of flow into our hand. And I'm definitely trading the not the monetary policy statement, but at the open of the press conference at 11:30 Pacific Standard Time. So one of the questions was about watch lists and creating a basket. So we know we have the US dollar monetary policy statement tomorrow. So that gives us a chance to create a basket, another basket, right? So really what I need to do is I need to add a section first. I'm in TradingView. You come up to this list side and you can create a new list here with this button. You can upload a list. If I wanted to share this list, I can click this and it'll put up a copy link and I can share this list. You can copy and paste this list into your TradingView. You can rename the list like I did with relative strength watch list or the crypto list. You can favorite your list. You can add sections to your list. I'm gonna need to add a section to my list because I need to add some symbols for interactive brokers. So I do my currency analysis with volume, and interactive brokers doesn't allow you to use volume because such a an important tool. So they take it away from you, literally. So all I can use is ATR, momentum, and things like that. And since it's a different broker, they provide different prices. The prices that I can trade have to be in increments of zero point 0.5. So everything either has to end on a zero or end on a five. Much different than regular or retail accounts that allow you to grab whatever price is available right then and there. I have to move in increments of zero point 0.5. So here I'm gonna go over to this add to watch list position, and I'm gonna add all of my US dollar major currency pairs. So we got USD JPY, USD CAD, USD CHF. We got GBP USD, Euro USD, Aussie USD, Kiwi USD, and not dollar or not Swiss dollar, but dollar Swiss. So we have one, two, three, four, five, six, seven. There's all seven of my interactive brokers. One, two, three, four, five, six, seven. You can change the flags like we talked about before. I'll probably be bullish dollar, USD, JPY, bullish USD, CHF, and bullish and actually bearish Euro USD. Um, things that I think are gonna go short might maybe a Aussie dollar, a Kiwi dollar, and maybe short dollar CAD. It's a potential there. And maybe even a long pound dollar if we think that the dollar is going to go weak. So now we can even arrange these based on the flags. All the flags are here arranged based on color coordination, what we think. So as we go through, we should see our bullish setups, we should see our bearish setups, just to keep ourselves in alignment. And those are the ways that I use watch lists. So knowing that these trades are popping up, we can do it by change percentage, which one has moved the most in whatever direction. We can see Kiwi dollar is the most bearish, right, at the moment. So going into this, like we talked about the sentiment, Kiwi dollar bearish could end up working out for us tomorrow. But that's it's with a grain of salt right now because we're not right up against that time frame. So the time we're going to be looking to take these trades is this 11:30 time frame, and I usually drop a vertical here at 11:30, and then another one. So that's my 30-minute cool down. Really, that's 11 o'clock. So 11:30, and I allow for my 30-minute cool down from that point, and then I could take the trades the second 11:30 passes. So this is my window of opportunity. What I see in the background while I'm in this window is pretty much where I'm gonna trade against. So with that being said, we talked about our relative strength calculation. We talked about um, watch lists. Is there anything else you guys want to discuss before we hop off of this call? Because I was able to do that, get all that stuff done. We're in a good space and place to go ahead and pop off here and see what we got going
What we
on.
got going on?
So for me personally, no. This is a good amount of information for me to digest and dissect, and then I'm gonna be watching everything play out tomorrow. I'm gonna be at work that time, but I'm gonna have my iPad next to me so I can be keeping an eye on the charts and everything.
Perfect.
Thank you too.
No problem. No
No
problem.
problem. No problem.
Tab, you got anything?
Might have said, nah, not right now. I'm chart up with some stuff, and I'm gonna send you my trades, like what I plan to trade in the morning too, because
Okay.
I'm gonna get up and probably I'm gonna get up and chart probably like 6:30.
Mhm. Okay.
So I'll send you what I look at, what I come up with.
Okay.
I'm not gonna execute anything tomorrow, but I am gonna send it to you.
Yeah, definitely. If you're not going to execute, that's perfectly fine. But definitely look at the behavior around the monetary policy statement and focus on that. So, because that's every 6 weeks, and the behavior is similar. It's similar. The next one is going to be in June after this. And I'm headed to Mexico in June to go trade it. So you guys are invited.
Oh, funds
Oh,
can't get me
funds
there in
can't get me
June,
there in
but
June,
maybe
but maybe
the
maybe
December trip.
the December trip.
Word up.
Okay.
We'll keep
Well,
it popping.
we'll keep it popping.
We'll keep
I'm
it
gonna catch
popping.
one of these trips. I promise
Yeah,
you, I'm
it's
gonna
all
catch one of
good.
these
I'm gonna
trips.
keep. I'm gonna keep them
I'm
rolling
gonna keep
too.
them rolling too.
I'm gonna keep them rolling
Thank
because
you.
I
Keep them
want some
rolling
people
because I want some people
to meet
to
me out there.
meet me out there. Absolutely. Well, y'all be safe, family.
But yeah, y'all
But
be
yeah,
safe.
y'all be safe.
I'm
You
headed.
too, and thank you again.
Hey, no problem.
Hey,
Y'all be
no
easy.
problem. Y'all be easy. All right.